round two right here, Ashton. If you want to, right off the bat, since this is round two, go ahead and you're getting your setup style strategies. I'm going to make you the host with the most real quickly, so that way if you want to share your screen, you can. You are now the host boss. To share yours, like I said, if you want to start going over things, I'll ask you questions along the way. I'm sure you kind of have what you want to go over already pulled up. So if you want to start going over what you're looking for day in, day out, and of course, I know you're not trading day in, day out, but you know what I'm looking for each day if you're looking to take a trade, what you are looking for.
All right, so I'll actually show a trade that I'm actually in right now. It's not a huge position or anything like that. Also, I got to say this too. Ever since I would say around November of 2021, that's when the market started to get real nasty. I have not taken a quote normal position size for me since around that time. So
going smaller, essentially.
Yeah. I'm taking singles all day long.
Gotcha.
I'm not looking for doubles or triples, or definitely not home runs in this kind of market.
I love how we're using the same terminology, man. I say the same stuff all the time. And base hits add up. It's snowball effect, So take those. A lot of traders don't want to take them, and I'm like, dude, take the singles all day long.
Yeah, because if you take 10 singles in a row, that 11th single hits a little different.
Yeah, right. Yes, exactly.
All those singles compound each other, man, and slowly over time, and all this it doesn't take long in trading and investing to really start to see the compounding effect. I mean, it seems like it happens slow, like a death by 1,000 cuts, but man, it doesn't take long for you to actually notice it.
Right.
So, so with Target here, I got a couple different tools that I use, and I really hope my Thinkorswim does not freeze on me. I have a Mac, so it's not really friendly. So hang on, bear with me.
You're good. You're good. I used to run my Thinkorswim on my Mac. It actually usually ran pretty fine, but I know what you mean. I got a new computer monitor set up and everything, the Big Daddy, and it runs smoother now, but I know what you mean, so it's all good.
Yeah,
I'm glad to see you use Thinkorswim because that is my favorite chart. I've been with them for the longest time. I love Thinkorswim.
Absolutely. So with Target here, I want to start out by pointing out the tools that I use. So I'm going to get my handy dandy drawing tool. Okay. So the first one right here is called the Ready, Aim, Fire Pro.
Dude, I love it.
So this indicator is custom. This indicator is custom. All these are up here are not custom. So but I want to explain what they do and how I use them. I use every single one of these tools, by the way, because they all serve a very, very important role. So this one down here, if I go down here and I expand this out just a little bit, come on. So I want to make sure that you guys see all the details here. Or maybe not. Yep, I just got a performance reporting issue.
From the Mac?
Yes.
I guess because we're doing the Zoom too, right? You're doing the screen share. It's probably.
I would imagine. So, but I'll see if it still works here. Okay, here we go. So this right here is essentially a reversal tool. Okay, it's kind of like an RSI, right? That's a really popular one. Matter of fact, whenever I trade shares, I use the RSI.
Okay.
But whenever I'm trading options, if anybody is trading options, guys, and you're using the RSI, I strongly recommend not using that tool for options, because with RSI, it's a momentum tool, right? So if RSI gets below this line right here, it's considered oversold, right? If it gets above this line here, it's considered overbought. That's great and everything, but it helps you with direction. But the one thing it doesn't help you with is time. So if you're trading options, you have to get both the direction and the time correct. So that's why RSI does not work. Actually, it's far more harmful than beneficial whenever you're trading options. But this tool down here, it is incredible. Okay. It's called the Ready, Aim, Fire Pro. All right. So the way I trade this, and you can see over here, I got scanners, these custom scanners over here. And they tell me, okay, if I'm getting a buy signal or a sell signal. All right. And if they are not on these scans, typically I don't trade them unless it's for another strategy. All right. But the way I do this is see how we get this little aim and it's all lit up and pretty and green?
Oh yeah.
That tells me that the momentum is about to go from here to here, right? And what I do is I wait for this aim to fire, and then I wait for these beautiful pink arrows. Okay. So I'm in target right now, and just the other day, target popped up right here. Right. And again, I do the same thing over and over and over and over again. So this is a reversal tool. It's incredibly powerful.
And how do you get these beautiful, awesome? Because I like when I saw that earlier, when it was that's what I was watching with your stories. I was like, I saw the ST Squeeze Pro. I was like, I've not even heard of that. So how do you get these? How'd you get them on there?
So these are actually a mentor of mine, John Carter, probably the best trader I've ever seen. He's been in the stock game for 30 years.
Nice.
Okay? And some of the shit he does is like voodoo to me. It's like, I'm like, man, how did you pull that off?
Yeah.
But he created these. He made this, and we've all heard of the TTN squeeze, right?
Right. That's the one I used to use. Yes.
He created that.
Well, that's smart son of a
yeah. Yeah. I've spoken with John. Actually, I had him on my Instagram live, and I'm actually doing another one with him in August. So more to come.
Nice.
So this tool right here is pretty much the TTM on steroids. Okay. It's called the Squeeze Pro.
Right.
So I use this tool for reversals. Okay. This up here is called the Squeeze Pro. And this is momentum and the degree of a squeeze. So you actually have two tools embedded into this one, or two uses embedded into this, right? And what I like to see is if I get into for a reversal trade, which is I got in right in here, okay? All I want to see is, well, if you use the TTM squeeze, it's kind of comparable to the MACD as well. And I want to see these red bars. That means the bearish momentum is building.
Right.
But if it flips yellow, that means the bearish momentum is slowing down. So if I want to take a reversal trade, I want to make sure that these bars are turning yellow and they're increasing toward neutral. Okay. I also see I'm taking advantage of the exhaustion of the play. Okay. And what do I mean by that is these little dots right here. Got some black dots and we got a red dot. Yeah. Okay. If you use the TTM squeeze, you've seen these red dots.
Yep.
That means that the squeeze is building. But the Squeeze Pro takes this up a notch. It actually has a layering system in its squeeze. So if you have a black dot, it's giving you more of a heads up. Okay. So think of it this way. We have a black dot. That equals a low squeeze is forming. Okay. And then whenever you see a red dot, it's essentially on top of this black dot. So red equals a mid squeeze. So a little bit more potent, and it generally happens a lot faster. And then in a rare case, very rare case, where you get one of these bad boys, this is a gold dot.
Yeah.
That's a high squeeze. And at the beginning of this year, I was actually exclusively trading these high squeezes, and oh my goodness, these things can move in a very big way.
And so what's target? Where would be the entry? Where would you be looking for entries? And then where would be your target for your goal for exits? Just so even on just a target right here.
This is the beauty of options trading. Okay. So let's talk about if I were swing trading shares. Okay. If I was swing trading shares, well, what would be an obvious target for me? Probably up here.
Right.
Maybe the 200 SMA right here. But let's think about this. 143 roughly up to say 220. That's a pretty good return, but that could also take a very long time to get up here.
Right.
That could take a year, right? So is the the capital required to do that worth the wait? I don't know. I can't answer that for everybody, but for me, I think there's a more efficient way to do that. So what I do whenever I'm selling options is I'll take my entry here, Okay, cool. I got my signal here. I don't want to squeeze here. So these green dots mean the squeeze has fired. I don't want to squeeze here because I'm just simply playing the exhaustion play and a simple reversion back to the mean.
Right.
That's it. I'm literally playing from here to here, and that's it. That's how I make my money. And people are just like, well, how could you possibly make money on small moves like that? Just like this. I trade what I call, or not what I call, but what are called vertical spreads. And people ask me all the time, hey, Ashton, what's the best way to grow a small account? Right here. Without question, in my opinion. By far the best way to grow a small account. Furthermore, it's also really good with people who have a lot of capital and a lot of skin in the game because it limits your exposure. It protects you to the downside. Okay. So many benefits to trading vertical spreads. And here's a little scenario that I paint. There are two kinds of vertical spreads. One is called a debit spread. Okay. And number two is called a credit spread. Okay. And they are exactly what they imply in the name. Okay. Whenever you do a debit spread, you are buying the vertical. Okay. And a vertical is you're buying and selling contracts at the same time. But for a debit spread, you are net buying the spread. So you are paying money for the spread. But a credit spread, you are selling that bad boy. Okay. So you're buying a contract and selling a contract at the same time, but you're net selling, which you end up getting a credit. Okay. So if you're doing a debit spread, and let's say you're doing a call debit spread, you want the stock to go in that direction in which you on the side of the options chain that you're buying on. So if you buy a call debit spread, you want the stock to go up. If you're buying a put debit spread, well, you want the stock to go down. Okay. On a credit spread, it's literally the complete opposite. If you sell a call credit spread, you want the stock to go down for the most part.
Right.
And I'll show you something really, really cool here in a moment. If you sell a put credit spread, well, you want the stock to go up. Okay. So on this particular trade with Target, I sold a put credit spread. Okay. So that means, see this red line right here, 143?
Yep.
That is my short leg of this trade.
Gotcha.
So the other part to this, I don't even know if Thinkorswim will let, no, let's see. The other part to this is that I also, since this is a vertical spread, I also bought contracts at, I think it was 142. So I sold the 143s, but then I bought the 142s. Okay. And this margin right here, that is what creates my vertical.
Gotcha.
Here is the beautiful part about selling verticals. Okay. With the credit spread, using this exact example, I don't have to be right. I just got to be kind of right. And that should perk up the ears of every new trader. Because remember what I said earlier, if you are buying options, guys, so which predominantly 95% of retail traders are doing, they're either buying calls or they're buying puts.
Right.
Okay. That is not sustainable. That's just my personal opinion. I've seen countless, unless you're like literally day trading them, which I personally definitely don't recommend. Because we all know the shorter the time frame on which you plan to hold a position, the harder it is over the long term and to do it day in and day out. Okay. So as a newer trader, this is music to your ears, because here's what happens on a call credit spread. Because remember, we don't have to be right. We just got to be kind of right. So let's paint this scenario here. Let's say this white dashed line is my expiration. So I think for these contracts, I think I have, let me think here. Oh, July 1st contracts. So these expire next Friday. And people think, well, don't trade weeklies. Remember, I'm an option seller. Whenever these contracts get theta decay and they decay over time, that's to my benefit. That means I make money through the theta decay. So let's say this is my expiration right here. And since let me put this note down here too. I sold a put credit spread, right? All I need, because remember I said this is my goal up here, back up to the mean. Okay, and I got in right here, literally at the bottom. So I've had this contract for a couple of days, right? And every day that passes, this theta decay is going in my favor. If target goes way up, great, I'm going to make money. If target goes kind of up, great, I'm going to make money. If target does this, I'm going to make money. If target does this, I'm going to make money. If target does this, I'm going to make money. It doesn't matter. You see all these directions right here? If he does any of these, and as long as it stays above this price by this date, I get 100% of max profit.
Oh wow, that's dope.
So, but here's the kicker, and here's the really, really cool part. Let's say target does go ape shit and goes, that means, and let's say the expiration's back over here, okay? And target just goes ape shit crazy and it goes straight up. Well, then I don't have to wait until expiration, because then it's gone up so far, so fast, to where my max profit could be at, I don't know, let's say 95%. Okay, because the only way to get true 100% of max profit is you have to hold through expiration.
Yeah, the expiry date.
Yeah, which I don't ever do. I don't ever do that, and I don't.
Not once. You've never done it once.
No, I don't ever recommend.
I was just wondering. It's like one of those things. Deck always talks about. He's never had coffee in his life. You've never. I was like, and I'm not a big coffee drinker, but you've never had it once. Really, never once.
Dude, him and I are gonna have a conversation about that one.
Yeah, that's what he said. You've never had coffee once in your life, really, for real, never once.
So that's the cool thing. If it goes ape shit, then I make money faster. It's closer to my max profit. And usually, if I'm being honest, I don't shoot for 100% max profit. I think that's a fool's errand. I think that's false expectations. And plus, I don't like holding through expiration ever. Because it depends on the broker. But if you hold through expiration, and let's say your contracts are in the money, which we don't want, some brokers will liquidate your position and require you to buy the shares.
Oh wow!
Even if you had that leg down here that you buy, because that's essentially protecting you. Because if you sell options outright, it's considered a naked option. That's very dangerous, right? Which is why we buy this contract to offset this as protection. But even if we have this, some brokers will still assign you the shares. I don't even want to take that risk, right? I don't want to stay around to find out. So I don't hold for 100% of max profit. I'm cool with.
I almost said 80%.
Yeah,
I was like,
yeah. For my vertical spreads, 80%, guys, you can make a really, really, really great living. Hell, I mean, even if you went with 50%, you'd still be sitting pretty. Right. And here's why. We've all heard the risk to reward chart, right? So 1-to-1, right? Vertical spreads, since these are so consistent and your accuracy goes through the roof on these trades, because again, here, as long as it stays above this, you're in great shape and you're making money. So you imagine that your accuracy skyrockets. Okay. So what does that mean? Let's just say if you're an ultra conservative trader, and let's just say you shoot for 50% of max profit. Okay. That means that you only have to risk 1-to-1 to break even. For every trade that you win, you only have to win 50% of the time to break even. But if you shoot for, but let's say your accuracy is, I don't know, 80%, which is not far-fetched at all whenever you're trading vertical spreads, well, then 50% of max profit, you're in the green over a long period of time. So there's so many benefits to trading these. It's
And now,
ridiculous.
I'll ask you this: would you trade those vertical spreads without that ST Squeeze and the ST Ready Aim Fire Pro?
Yeah, 100%.
I just didn't know if that would help. If that helps you out that much more having that. I mean, I know it does, but if it's that much, if that's the big edge that comes with this, or any trader, even if they didn't have the ST Squeeze Pro or the the Ready Aim Fire, if they could actually be successful at it.
Absolutely, you can, because there are tons of other traders out there who've been doing this for decades, who've been trading vertical spreads and do it very successfully, and they don't have any of these tools.
That's awesome. Yeah, I just want to know.
So yeah, the verticals. I'm telling you, man, it is a complete game changer for new traders and for people with a lot of skin in the game, because it benefits you in different reasons. For people with a lot of skin in the game, it protects you, right? And it doesn't matter if you have $1,000 in a trade versus $100,000 in a single trade. Having protection is a great thing,
I was going to mention another place in life where protection's always good, but that's for a different talk one day. One question I do want to ask, though, before we forget, because you did bring up the ones that were custom, what about the indicators that aren't, in case they want to use them and that you are using on that top chart?
Okay, so I don't want to mess around with my platform too much, or else it might just completely crash on me.
Right.
But these up here, these are very important tools, okay? These lines right here, these are called Keltner channels.
Oh, that's right. That's what I thought they were.
Okay? So that makes up, this whole thing is called the Keltner channels, okay? The reason why these are important, and the reason why I have them structured the way I have them structured, this can get pretty gritty pretty fast. So whenever the market makers price option contracts, they price it based on a lot of different things, but one of which is called standard deviation.
Yep.
Okay? That's how they price contracts. That's how they put in their expected move, right? I would pull up my options chain here, but I don't want to mess with this damn thing right now. But if you look on your options chain in the upper right-hand corner, it will have a percentage, which is your implied volatility, and then it'll have a plus or minus number in parentheses. That plus or minus number is really, really important, because is called the expected move by the market makers, and the expected move, the expected move is always, that's ugly, is always one standard deviation away from price. Okay, what the hell does that mean? All right, and why is it, and how does it factor into these Keltner channels? Okay, let's start here with the white dashed line. Okay, this is my moving average, so this is my mean, the average that goes in the middle of all these. I use the 21 EMA. Why? Because this is the most universally used EMA across traders, hedge funds, algorithms, etc. All right, that's why I use it. People can use a 20 SMA. Doesn't really matter. Doesn't really make all that much of a difference. But you do need a moving average in there to act as your mean. If I go out to these blue lines here, by the way, all these lines here are called ATRs, which stands for average true range. Okay, and these are all calculated based on standard deviation. It's not quite standard deviation, but for this example, that's what I'm using with standard deviation. Okay, so going back to these blue lines right here, this is +1 and -1 ATR. Okay, and if we go back to, I don't know, sophomore, maybe freshman year in high school, we all remember seeing this, right? We all remember seeing this curve, right? This is our mean, okay, which happens to be my 21 EMA.
Right.
Okay, so this is my 21 EMA. This is called the bell curve. We all remember that. And we also remember, if I go out to here and to here, well, guess what? That's my -1 and +1 ATR.
Right. Yep.
Okay? And this is why I use these tools, because it is strictly math. Okay, I am a math-based trader. but I don't like to make it complicated. So I apologize if it sounds complicated, but I'm trying to make it as simple as possible. We know that based on math and statistics, that any kind of number or any kind of chance of anything falling in this zone, well, it has a 68% chance, or I'm sorry, stocks remain within this zone 68% of the time. Sounds crazy? Does it sound realistic? It is a statistical fact. Okay. And that's why people say the stock market doesn't move a whole lot. It just kind of drifts up and it drifts down or drifts sideways. The market that we're in now is just, it's kind of an outlier because when we're hitting historical volatility levels, but that's the whole point. The stock remains in this zone 68% of the time. Okay, let's take it a step further. Let's go out to the red line. Okay, let me actually erase this part. Okay, if I take this a step further and go out to the red, okay, this is +2 ATR and -2 ATR. Okay, same concept here. We go out. Okay, -2, +2. Now, within this zone, stocks spend 97% of their time within this range. Sounds crazy? Don't believe me? You can literally Google. If you guys don't believe me, just Google this. Google 2 standard deviation percentage, and you'll find 97%. Okay. All right. So that means that if price is outside of this band or below it or above it, it's got a 97% chance that it's going to come back into that channel. Okay. Using math to my favor. Okay, let's take it a step further. Let's go out to the green. All right. -3 and +3. Okay. Stocks spend 99.7% of their time in this zone. What does that mean? That means that if a stock gets outside of this zone, like it did here, guess what? It's going to come back in it. And look what happened on target. Okay. That is why these are so incredibly powerful. So that I can
it's a good breakdown. That was awesome. So that's why I wanted you to break those down. You did a marvelous job and you keep it simple. I love it. Good job there, boss.
Yeah. So this is why I pair this with this.
Right. Yeah.
With this. So using that mathematical argument that I just pointed out, if I get a reversal signal, check. Do I have a squeeze forming whenever I got into this? Actually, I think I got in here. No, because I don't want one, not for this type of strategy. Okay. But has the histogram flipped? Yep. Is the histogram yellow? Yep. Check. Is price between here and here? Because remember, the math is in my favor for it to revert back to the mean. Because all things in life, folks, if there's an extreme in one way or the other, things always migrate back to the mean. That's why traders use moving averages in the first place, right? Because price always pushes back to the mean. Whichever mean you're using, it doesn't really matter. So I have all these things in my favor as a trader. I like those odds.
Right. Yeah. And I'd say this is what you're using. Just pretty much it. This is your go-to, like you're talking about strategy. You're using this day in, day out to look for 90+% of your trades come from this right here.
Yep. Bread and butter, baby.
Love it. And that's what I tell most traders. Have your bread and that's sometimes when you have these indicators like me with my Thanos, this perfect segue into that, and that was like however many minutes ago now, but the Thanos is exactly what I'm doing. I have these indicators that line up together. When they all line up, it's essentially yelling at you like, hey, dumbass, if you want to make some money, here's your money chance.
Yeah. Yeah. And the cool thing is that you very well may still lose on that trade. But if that's all trading is, man. If you have all these things lining up in your favor, that's all we can do.
Right, exactly, yeah.
That's all we can do is put ourselves in the most advantageous position to win on the trade, as well as mitigate our risk, right? With proper position sizing.
And what are you usually in that time frame wise? I know you're usually trading on the daily anyway. So is it just the daily? Do you look at the 15, the 30 minute, the 10 minute, the whatever? What are the time frames you're usually in?
So I look at different charts at the same time. I watch the weekly, the daily, and depending on the volatility in the market, I'll either use the 4 hour or the 2 hour.
There you go. Awesome. Yeah, I want to ask what time frames you are always in, and there you go.
So what I'll do is, but my go-to is the daily for
Yeah.
sure. But what I'd like to do, and this really helps me dictate my sizing, is if I have all these things lining up on the daily, which we do, cool. But if I also have all these same things lining up on the 4 hour or the 2 hour chart, bro, I'm getting a little bit more aggressive there.
You're getting juicy. You're like, oh man,
Yeah.
you see it in front of you. You can't wait to tack.
So for the weekly, since I'm only going out like 2 weeks or so on my contracts, I watch the weekly because it's really important. Because I just use the weekly to make sure that there's not a big move forming on the weekly that could possibly go against me.
Right, yeah.
So I just use that as like a precautionary measure kind of thing. But the daily's my start, and then I double check it with these smaller time frames, and then I double check it against the weekly.
That's what I tell traders. You got to have those multiple time frames. You'll just get stuck in one. You get glued in one. You'll be stuck in it, and you'll never be a successful trader. You know, some start off, I'm in the 1 all day. I'm in the 3 minute. Go through those time frames, and you're going to see stuff in different landscapes than you thought you saw before. And like you said, you're in the daily, but boom, you get into the 4 or 2 hour, and you're going. You go from, oh, this looks good to holy shit, this looks good. You know.
Yeah.
So, guys, do you have any last questions here? The bands we were just looking at there, I had a question on that. Those were the Keltner bands right there. Those are huge. I mean,
Keltner channels.
Keltner, yeah, exactly. I mean, those are. I used to use those, and then I moved away from them. But everyone asks, I still keep my VWAP on, and I still keep the upper and lower band. Kind of shows you the same thing, but I may go back to using these now after just watching you today. But if y'all have any questions,
here's the cool thing too, and this really ties in with the Squeeze Pro, because a lot of people use the Bollinger Bands, which is a fantastic tool.
Right.
The Squeeze Pro is the Bollinger Bands plus the Keltner channels combined. That's what makes this stuff. So the way this is designed, because the Keltner channels, the Bollinger Bands look something like this, right?
Right, yeah, they're more wiggly.
Yeah, so what happens is whenever the Bollinger Bands get squeezed this tight, like this, okay, and if it gets within -1 and +1 ATR between this blue line, that's what gives us our squeeze.
Gotcha. There you go. Did not know that. That's awesome.
Yeah, man.
And he said, "What scan?" So D9 says, "What scanners? What do the scanners on the left look for?" So I know he just went over them earlier, but if you want to go over those scanners that you have on the left and the scanners that you use, and I'm thinking they line up with what your setup there.
Yeah. So right now I can't even see what the full ticker is here, but there's 2 on here, one of which is MAR. Okay. So essentially what these are pulling here is anything that has an aim and then the pink arrow. So any stock in the entire stock market with a certain parameters, I look for certain size of companies, and I don't deal with the cheap stuff because I want stuff that is liquid in the options market. But there's a lot of stocks that I'm looking for, and this scans for all the stocks in the stock market that are giving me an aim and then a pink arrow. So I don't have to go looking for this stuff. It comes right to me.
That's awesome.
And a lot of people are, well, if you're using scanners and you're not a real trader. I agree with that to a degree. And that is, if you're just using scanners and you're going to FinViz and just typing random shit and different parameters every single time that you go to FinViz, well, you're wasting your time. But if you are very intentional and you know exactly what you're looking for, scanners are a must. So
love it.
So yes and no on that. But since I'm very specific on what I look for and I'm very, very picky, I need these scanners to help me filter through the noise. And then the sell, this one down here is the same thing, right? It's just in reverse. So right here, you see how we got this ready down here? Okay, the ready means it's still a sell signal because we've got the pink arrow, right? Okay, and look what happened here. Damn, this would have been a hell of a move. It fired right in here. Boom, look at that.
Yeah. Boom.
So,
I love how indicators work sometimes, and you just look at it and go, "Damn, that works so pretty."
Yeah, I'm telling these 2 indicators right here. If anybody ever asked me, okay, if I had to choose one indicator to use by itself for the rest of my life, this one right here, without question.
That's awesome.
But This one is a very
Yeah,
close
those are
second.
both beautiful, man. Yeah, I'm gonna have to. I'll be very very insightful on these moving forward from you as well, and getting those into my, because I use Think or Swim, so I'd love to get this into one of my because I use I have two different if I can talk right, accounts with him. So I'll have two different accounts. So I would love to on one of them start using this until I completely start loving it, and then using it on the daily. But yeah, I would love to put this on one of my big charts. So that way I just kind of get used to it. Like I said, like even like anything you come up with, the more you got to practice, you got to apply it, and it takes a while for any trader. Like even me, I trade been trading for 5+6 years now. I could get this. It would take me at least a good month to get this down and under. So I just want traders like, well, I'm gonna get this and I'm gonna be successful. I mean, it'd take me a couple of weeks to get comfortable with it, and then at least 2 to 3, and the next thing which again, that's why I say next thing you know, because I am more about hey, I don't care, day in, day out. I know time's gonna fly by, and it's gonna be a month before it. A lot of traders just they want, like you're talking about, they want time to fly by, and I'm like, I love putting that time in. It's kind of like when you go on road trips. It's the journey. It's the journey that's the fun. I mean, the fun's always there, but that the road trip's kind of part of the fun too.
But I love the process too, man. To me, it's if you don't love the process, then everything just becomes a chore. And
right? Yeah, exactly. Yeah.
You can't have everything in your life just being about a chore or solving a problem every day. You know what I mean? And these tools make it easy to really enjoy, because if you get a couple trades under your belt and you see these tools working as exactly how they're designed, and you see it in live action, oh, it's incredible to watch, man. And I've got so many people in my group turned on to these, and they're all just like, I can't even imagine a world now without using these tools. Because I mean, at the end of the day, as a trader, I know it seems like there's a lot going on in my charts, but as we just went through, they all serve a very specific purpose, and they all feed off of each other, right? And it doesn't matter if you're a trader, it doesn't matter if you're a barber. If you don't have the right tools, you're not going to be performing as best as you can. You can still get the job done at subpar level, but if you don't have the right tools for what you're trying to accomplish, man, you're fighting with one hand behind your back. And with us going against the market, and the market's, it's tough, guys. It's really, really tough. So we need any kind of advantage that we can get.
Last couple of minutes here, boss. Where can people find you? Instagram, social media, anywhere out there? Where can they come find Ashton Nolan and your book as well?
Yeah. I'm on Instagram. That's my main hub. I had like 95,000 followers on TikTok, but I just got randomly banned one day for no reason, permanently. So yeah, I'm still bitter.
I'm right there with you, because like point being, I talked about I did talk about Day Trade Professor and how his Instagram was taken down. Well, mine is Josh Smith Official, so my Josh Smith Official, I had not 90,000, but I had a decent following building up, and then they were like, yeah, bye bye, and I'm like, what did I do, So it's weird how those social media sites love to take you down out of nowhere.
Yeah. So yeah, hit me up on Instagram, hit me up on Twitter too. I'm very, very active on both. I'm very active on Instagram. So yeah, and Josh mentioned my book. It's completely free. It's an ebook. It's called The 10 Cardinal Sins of Stock Trading. And it's more about mindset and some of the big mess ups that I've encountered throughout my trading career, and things that if you can just avoid.
Right, yeah. Like, hey, I've done all the hard stuff. Just avoid this. I've done all the hard stuff for it. Hey, what I mean? That's what I tell a lot of traders. Like, hey, I've done all the dumbass shit. You don't have to do this anymore. I'm trying to tell you what to do and what not to do.
Yeah. Even if you don't listen to what I'm telling you to do, at the bare minimum, listen to what I'm telling you what not to do.
Right.
We've all been there. Like, if you've been in the game long enough in the stock game, and you've taught people, and and you've been around for a handful of years, and 8 for me, you've seen a thing or two,
right?
And a lot of it, most of the time, whenever you see it, it's not pretty, and it sucks to go through. But man, I wouldn't change anything, man, because it's all a learning experience. And I'll close with this.
Well, I'll post all your links after we're done, man. I just want to say thank you so much for coming over here, man. I have this recorded, so I'll put it up in just a little bit. But thank you so much, Ashton, for coming over here again, man. And we'll get you on when I do interview week round 3, part 3. I'll get you on again for sure then.
All right. Yeah, I think I have time to explain my last thing, because I think we're running out of time. But I appreciate it, man. It's always fun to talk shop, go over charts, and go over strategy. So I appreciate it.
Dude, you're the man. I'll send you the link here in a little bit. I'll post this in just a minute. Have a good rest of your day, boss. I'll hit you up here in just a few. Have a good weekend.
You too, my friend. Everybody stay safe. Have a great weekend.
Boom. There's my man. I was hoping I hate the stupid. That's why